right, everybody. Good afternoon, good evening, good morning. Welcome aboard. This is Ready, Set Crypto. You've got Dak and Mav here on Wednesday, August 10th. Welcome aboard. Do us a favor as you check in. Please go ahead, hit the thumbs up button and check in just to let people know that we have started, and let's get some activity going. Also, let us know where you're coming in from. We will get started here in just a couple of minutes. So if you are new to us and have not seen one of our sessions before, typically we'll get started with some words of wisdom here from Mav, and then we'll end up the session looking at charts and looking at your favorite coin pairs. So with that, let us know where you're coming in from. Hit the thumbs up button, and we'll get started here in a couple of minutes. How you doing there, Mav?
Hello. Interesting day, huh? But
real interesting across the board. I mean, this is one of those days that we don't see that many of.
It's true. Quite auspicious, but also quite I don't want to say confusing, but sending mixed signals, I would say. Oh, nice. We got a good group today. All right.
Let's see. We got Coob coming in from Monkeypox, California. We got Matador coming in from Melbourne. We have Maureen coming in from Med School. We have Buckhorn coming in from Little Rock. Welcome aboard, everybody. Smash those likes if you will. And Coob, good luck with that monkeypox stuff, man.
Sounds serious.
All right, we got first-time listener from Baltimore. All right, let's hear it. All right, fantastic. Thank you for showing up here, Norm. Glad to have you. So while we're doing this, while Mav is getting a session started, if you guys want to, just to save a little bit of time here, and you can get your coin in first, go ahead and chat in with what coin pairs you'd like me to look at with these. So not the project name, but the actual ticker number that's on TradingView, and we'll get into that. All right. Good to see you, Aussie Slade and Ikena Victor. Welcome aboard. All right, Mav, show us what you got.
All right. So I will try my best not to pontificate today about obviously some great information. Well, I don't know, great is the right word, but like, substantial, important, that sort of information regarding kind of what are the current, if not, I don't know, mostly a milestone of economic conditions and helping us kind of project out, forecast as best we can as to what's the back half of the year going to look like. Today's index of the CPI, the reports that came in, gives us a good weather vane as to what is coming down the pipeline. And obviously crypto is loving it to a degree, but as we'll get into today's topic, is this a good thing? Are we seeing the right sort of conditions for crypto to be in a good position? Or is this going to be another one of those temporary, like, I think this is good, but in a couple of weeks, we'll forget about it and head back down. So that is one thing to talk about. But I think another thing that I was out there on Google looking for it, and so far as I can tell, no one's really talking about this. But now that we're officially, or based off your definition, whatever, in a recession, what happens after the recession for crypto? Where is Bitcoin coming out of this? Because as we all know, crypto has not been through a recession. It was born out of a recession, but certainly has not seen one since it was that first Genesis block that Satoshi put out there. No, I think this is going to be a very interesting next couple of months for crypto, and I think possibly quite fortuitous, if not auspicious in a lot of ways. So anyways, guys, today's we saw quite a lot of heavy dose of good information, good sort of, hey, this is what's going on with the consumer, basically the confidence of what's going on here. How are people feeling right now? Are they feeling scared, or are they feeling not? And by and large, yeah, there's definitely a degree of fear. People are encouraged to be saving rather than spending right now. And that is reflected in the inflation numbers, but they were not as high as some people were forecasting. Came out at 8.5% year to year, with a 0.0% month over month, which is very interesting because, for one, hey, let's celebrate the fact that we've seen a topping, at least maybe temporarily. We'll see if that truly is the top of inflation. This is the peak of inflation. But what's also interesting is the fact that that is seen, that number 8.5% is seen as a good thing, considering that that is some wicked inflation as far as I'm concerned. That is still some really bad mojo in the system, and it's something that I hope we have a good answer for, or some sort of way to mitigate that going forward, because it's really the forward looking inflation. Remember that inflation is just calculated year over year. It's not a good representation of like the true state of things in the broad spectrum of it's the same thing as GDP. If it's just measuring year over year, it's not taking into account like the more, say, human factors of things, like people being burnt out of work. Just because they're more productive does not mean they're more productive, things of that nature. So anyways, this is very important for us right now, because I feel like people are increasingly, scared of potential recession, or sorry, not potential, now confirmed, where that recession is going to go. And, Doc made this comment the other day that already it feels very different than the last recession we went through, right? If we this is the inflation rate that we've seen over the last couple of years. We look back at the difference between periods of growth versus these recessionary periods. Obviously, one is a lot bigger than the other, right? But it's also the case that people are more emotional during, especially like 2008. It was a desert. It was a ghost town for a bit in the economy. And will we see something to that effect? So far, so to some degree, but not really. It is not the same thing at all. And that is something very important, because on average, we see about 67 months of expansion versus the 11 months of recession. And if you believe the trends, that by the time a recession is called, it's already about 7.8 months lagging to the start of the official recession. So that's all to say, we have maybe another, say, half a year to sometime in 2023. That's about how much we can project out based off of previous trends. And obviously, this is a very different one that we're in right now. But that all said, I think we are quickly seeing just how this will already start to serve us up for a really good time, opportunity coming out of this. You want to look at kind of like what are the typical trends of how we go from expansion to recession, and what kind of defines each of those call them stages of the flow between those two periods. What defines recession is obviously contracting profits, rising unemployment, declining activity. I mean, what we've seen right now is that we've gotten back all the jobs that were lost during the pandemic, and that's really cool. And the fact that there is still, even with the uncertainty, even with the rising costs of goods and housing and fuel and things like that, or they're relatively very high, and with relatively very high inflation, we're still seeing a pretty strong job market out there. So again, this is just a very weird recession, right? But what starts to define us coming out of this is what I want to bring all of our attention to, is when we start to see housing activity increase, when we start to see economic activity accelerate, when we start to see easing of central bank policy, as we've talked about, when the Fed goes dovish, if we start to see a signal for that, when they start to talk more about keeping jobs rather than controlling inflation, that is a very, very good green light as it relates to where Bitcoin wants to be, which is a nice hedge on this sort of reflationary environment, and coming out of a recession to be well positioned to be capturing a lot of that excess capital, and that where people want to be tying up their assets now that they're not so scared of sort of the recessionary doomsday environment. If they're starting to feel encouraged again, that's a really good sign. And that's why when we are kind of at the depths of this recession, right about hopefully where we are in the next couple of months or so, again, we'll see. That is basically peak buying opportunity, at least based off of historic trends. But Doc is definitely going to disagree or have his own take on that. But I think it's definitely the case that the lower an asset that we know has upside potential, like Bitcoin goes, if it goes below 20K, if it goes below 15K, certainly if it goes below 10K, the safer that investment becomes, so long as you have a long-term horizon. The more, call it, you're just planting better seeds of upside potential, because as we've seen over and over again, Bitcoin kind of follows these same sort of trends where, yes, it will have times of lots of bearish, bust, but it will also have times of, hey, halving, hey, boom times, hey, opium to the moon, that kind of stuff. And I think this is another chart to pay attention to, which is that most of the pain we usually see leading up to a recession. That's when things are the worst. And certainly looking backwards to March, April, May to June, those were some bleak times for a bit there. We were projecting that maybe Bitcoin would go down, maybe the entire economy, the stock market would follow, and it would just be a lot more dramatic of a drop than what we've really come to see. And if this data holds true, if this trend holds true, that the worst is already behind us, and that we just have sort of this, are we coming out of the recession or not? Yeah, back and forth for a little bit here while the Fed tries to do what the Fed's going to do, and everyone else is in their own sort of guessing games. Okay, fine. That's an environment we can certainly play into, and certainly come out of in a very strong position, because we know that, just look at the trends, look at where things are going. Where is the Fed going to eventually have to go, if not back to encouraging risk on, encouraging spending, encouraging people to participate in the markets, not be in savings accounts. Right now, Congress is considering a couple bills that are going to, incentivize you to, go into dividends or do savings, and do things like limit the capital gains tax based off of your income, and things of this nature, and really just try to get people to be investing right now. I would say that that's a good start, but I think we, being in crypto, need to take it a couple steps forward and look to where that trend is ultimately going to play out, which is a return to consumers' sentiment, positivity, the sort of things that we want to see recovering going into 2023, 2024. So by then, we will be in a very, very good position. So all this is to say is that I am not seeing enough people talk about where Bitcoin crypto is going to be coming out of this recession. All I'm seeing right now is people saying, well, will crypto survive the crypto winter? Will Bitcoin, prove to be a inflation hedge, or, whatever this BS narrative that CNBC or the other ones want to spin. That's all cool for the headlines and stuff, but ultimately it's reactionary to what's going on. We, being with a little bit more intelligence and long-term insight, can look ahead and say, all right, it's going to go up and down. That's been the trend of 2022. That has been, it's just been going up and it's going down. Not really any sort of long-term trend intact. But once that turns around, I think there's a pretty good chance that it's going to be going to the upside, and with some pretty good vigor, now that people feel a little bit more confident of where things are going. But that being said, there is still some big macro issues at play. There's still very much supply chain issues. There's still very much things like conflicts in Ukraine and Russia. There's still very much tensions between China and the US, the same sort of geopolitical, geoeconomic BS that we deal with on a frequent basis. But I think it's still the case that we are in a space that continues to represent what's coming next, where things are going, and hopefully we can take advantage of some of those trends. So more to come. I think this is we're still kind of in a holding pattern to some degree, but at the same time, things are starting to look encouraging. Are they completely positive at this point? Are we, completely bullish at this point? Absolutely not. We very much want to take a, risk, sort of risk averse approach while things still play out. But right now, based off of the trends, based off the data that we're seeing, based off of just where things are starting to head, it's promising. And it's certainly something that crypto is going to benefit from. But Doc, what's your take? What do you think that this is going to play out as sort of a very weak recession, and then we're going to be right back to bull land by next year, or is this going to be something that surprises people?
I think the always the answer is it's going to surprise people, because what I'm seeing here is a lot of people are saying that, hey, this is just like 2008. The parallels are just like 2008. And when everybody comes to the same conclusion like that, typically what we find is that the majority are wrong. Something new manifests itself from that. So kind of the way that the bond market is pricing this in, and if you guys don't know anything about the bond market, again, I'm not an expert on the bond market, but I do follow them peripherally. And it's probably the smartest market out there, believe it or not. It's one of the biggest ones that's out there in the world. And so what they're doing, the bond market right now is anticipating that things are going to be, I would say, okay into the end of this year. And then what they're doing is they're seeing rates contracting at the beginning of next year, which is not necessarily good news. So if you play that out, we may see assets start to rally or begin to rally into the end of this year, which is what we're seeing right now. And then we get to the end of the year when everybody is, bullish and back on the train again. And all of a sudden we go into round 2 of the bear. So we could see something like that. So right now is not the time to be predicting the future for anybody. So let the price play out what it's going to be. So this is the toughest part for especially newer investors, because you want to be able to hitch your wagon onto somebody that's predicting the future and you want to believe in. And what happens is you get that confirmation bias into whatever that dude is saying. And then effectively you put the blinders on and you don't see anything else. In fact, even if the price is moving in front of you, you discount it because you're so bought into that particular view of things. So what I would say is keep your head out of the news, watch the price only. And that's really what we specialize here in ReadySetCrypto. Okay, so before I go into this, before I go into all the charts, I'll do one last call for tickers, if you will. If there's any tickers that you guys want me to take a look at, we'll do a quick call for tickers out there. So if anybody has anything like that. Okay, so let's switch over to the charts. We'll start with Bitcoin. Right now we're seeing a little bit of a rising pattern right now, which is good, but I want to see this thing take off and explode. It's got to get over 24,000. And as we look at the volume profile here, if it's able to break out over 24,000, it should shoot straight up to 28. Again, that's not a prediction. That's just more of there's no resistance up here. There's no overhead supply. This is where all the overhead supply is sitting. So if it's able to break out over 24, this is what we're looking for, is a swing up to 28. Now, we're not anticipating that this is the end of things. We may end up getting up to 28, and then we come back down again for what might be a higher low. Bottoms are going to be very difficult. Bottoms have always been very difficult with cryptocurrency, which is a little bit different than other assets. So we have complex bottoms and we have very simple tops when it comes to crypto. Okay, somebody else was asking about Ethereum. Ethereum is looking pretty good as well too. What I like about Ethereum for today is the volume. The volume is very good. And really the next target is up here at about 2,400, which is the bottom of this pattern here. So if it's able to get out and achieve, it's almost like a rocket achieving escape velocity from the atmosphere, right? You got to expend all this power to get out of this pattern. And once you get out of the pattern, it should fly up to 2,400. So the question is whether or not it'll get out of the pattern or not. So watch that one carefully because that could be explosive. Okay, the next one, let's see, we have Near Protocol. Somebody was asking about Near Protocol. And this one actually looks pretty good to be building a base. This is sort of that rounded base that we talk about all the time. Here's where my buy point is for this. And oh, by the way, just to let you guys know, we do have this sheet that's over here, which we maintain for our Omnia customers. So if you're curious about where to get in and what to do and how to manage your position, this is something that we keep up every single day. So none of these are new for us, right? So this is a rounded base. This is where I'm looking to pick up the position. This is where I believe the volume will start to come in and people will start to chase it. And you can also see the same thing here in volume profile, that there's no overhead resistance here until we get up to about 11. So I'm playing this for a swing up to about 11 on Near Protocol. Okay, the next one that we have here in the list through request is EVMOS. See if we can find this. Okay, so let me try a different exchange. So that's BitGet. Let's try Wabi. That one doesn't look too good either. Let's try this one on CoinEx. And they all look relatively terrible. So this is a chart which has absolutely zero trend. So for this one to actually get up and get moving, it's probably going to have to break out over about 2.1 if it wants to attain a trend. It's just had no trend. It's just been going absolutely sideways through this whole time. So these are difficult to trade because they typically don't produce very good results. You know, when you compare that versus something that has in the past trended well, whether it's to the upside or downside, you can kind of see the difference here with that. So EVMOS, I would kind of stay away from that one right now until it's able to attain a trend. All right, let's look at Phantom. Phantom is another one of these that's building a base. And you're seeing a lot of crypto coins that are building this base here. This is almost building up power. And a lot of times what you'll see is that once it gets out of the base, it'll explode higher. So I would look at this to get above 50 cents before taking a long on the base. All right, so let's see. The next one we have is Cardano. Cardano is also building that base. I want to see this get above, I'd say about 56 cents on Cardano before I would consider a long on Cardano. Next one I have here is IMX versus Tether. Let's look at this one. Okay, kind of the same thing. We're seeing a lot of the same patterns here. Now this one's a little bit difficult because once this gets out of this base here, it's going to slam right into overhead resistance. So I don't see this one as having a very clear shot to the upside. If it's able to fight its way through this, it's going to be relatively slow and drag through this area. Okay, LYXE. So LYXE, Lexo token. Haven't seen this one for a while. Well, here's another one, and I would say the aggressive buy for this one is down here. You can almost see this breakout level, right? You can start to see this on the volume profile. If it's able to get above that level, which is about 785, 785 would be that level, maybe $8. That would be the aggressive entry, and you'd be able to get up to probably somewhere around 14 to 15. So you're almost talking about doubling your money on something like this. So if it's able to break out of that level, now here's the key. If you want to take something that's going to for sure break out, look for the volume on it. That means that somebody's getting spanked. Somebody's in pain. Next one that we have is Aave. Okay, Aave looks pretty good. This is today is actually pretty good. We're seeing some good volume coming in on Aave. I probably want to see this trade above maybe $1.22 before I would take this one, because that would show it's truly starting to break through resistance. Pretty sloppy chart. So Aave is tough to analyze. Okay, LRC, Loop. What is that, Loop Ring? Okay, this one is yet another one that's still building a base, and I would say I wouldn't get into this one until it's able to trade above 65 cents. SCRT. SCRT. Okay, this one is also, you can, again, I feel like this is sort of, deja vu, but this is sort of building this base here, and if it's able to get above 1.5, then you have escape velocity. Look for volume on here. This is a fairly illiquid. This is what, secret something? Okay. Thorchain. There we go. Mab, this is yours. Everybody seems to call you Thor anyway, right?
Oh, yeah.
Okay.
God of Thunder.
All right, God of Thunder. Here we go. Here's your chain. And I would look for an aggressive entry above about 3.5 on this one. That's your base, 3.5. That's the aggressive buy. On the third chain, let's see. Have we run out of... I think we've got everything except for QNT. And then I'll check the list and see if anybody has added anything in the meantime. Okay, QNT, this one is... I think we talked about this one last week. This is really good. I like this breakout from this pattern here. This breakout from this pattern right there. That looks really good at 110. So very nice. Now, so that is the best breakout level right there. So we're a couple of days late. Let's take a look at the RSI Laguerre and let's see what kind of energy that we have. Okay, so what I'm seeing on this one is that this breakout has exhausted the chart, and I want to see it break back up into here. And the way for this to happen is for it to consolidate under 130. If it consolidates and builds a high and tight flag under 130, and if it stays in this trend line, then take the breakout above 130, look for the good volume on there. Okay. Let's see. Okay, VREX is asking for REN, so I'm going back to the list here. Back to the book. REN is building a base, and it's pretty close to escaping the base, and that base would be right around 20 cents. So right now the chart's in exhaustion. I would expect to see that build up a little bit. Let's go over to volume profile again. You can see this a little bit better. If it's able to escape past 20 cents, it's got a pretty clear shot to 35. So watch out for the volume on there. The volume's starting to come in. This looks like it might be a good candidate for that. Okay, Polygon. Didn't we just look at Polygon? No, we didn't. Okay, so Polygon, we're currently long on Polygon. We've got our stop set for break even on this one, so we're looking good. If you're not into this one yet, I would look for a breakout above $1. So $1 is where the resistance is. And right now it's building up all kinds of potential energy on this one. And it's looking pretty good. So it looks to be, now on a weekly chart, this is just a drop up to, or rally up to another lower high. So for this to change polarity, we may need to see the weekly chart pull back a little bit. So just keep that in mind, that we may have a weekly pullback here coming along, but the daily chart is fully charged up. I'm looking for this to hit 1.2 in the near term. VREX, you're a simple top. I don't know what that means. Can somebody explain to me what that means? MC versus USTT. Okay, MC versus Tether. Oh, this one is so illiquid that I would have a difficult time. It's just not, there's just not enough trading activity in this one. It's just, I can just tell looking at this, it just doesn't have the volume. Let's see, Norm, quick opinion on XRP. Okay, I like the base at XRP. I'm looking for a breakout above maybe 41 cents or so for a breakout on XRP. UBT, thoughts on UBT? Let's see. UBT, Unibright, okay. Same thing here. I have Unibright with a base breakout at about 40 cents. So that doesn't seem to be happening right now. It's not, you know, you're seeing all these other coins that are like moving up and everything else is moving up, and you got Unibright moving down. So it's not playing along with the rest of the market. That's not to say that it can't pick up, but it's like until this thing breaks above 40 cents, I would not do anything. Okay, Solana is the next one. Solana, the base I have on Solana is about 50 cents or so. 50 cents is building, and that looks pretty good on Solana. Let's see what it does with. Okay, so volume profile. If this is able to break above 50 cents, we should be able to get this up to just about $1, 90 cents to $1. So this is going to be a worthwhile breakout if Solana does take off. Okay, so that's for Nicholas. Welcome aboard, Nicholas. Okay, Norm Quant. All right, Bob, I already covered Ethereum. Aussie Slade, Decred. So if I've already covered it, if you just go back earlier in the video. So Decred, wow, Decred has just been the pits for the longest time and is trying to break out. It is trying to break out. Now, quite honestly, what I would do with Decred is, unless you're somebody like Checkmate, who is fundamentally is probably like picking up everything that he can at these prices. If you don't have the means to do something like that, I would wait until this breaks above 70. So I am not one of these guys that advocates picking up things on the floor just because they're cheap. I would wait until this breaks above. I only want to be investing in assets that are going higher in price, to be honest. Okay, we'll do a couple more here. We'll do a couple more. And we're going to do Flow. Flow versus Tether. Flow versus Tether, I don't like this one very much at all. It just doesn't have any volume, I can tell. Now, the volume's starting to come in to this one, and you might want to consider a base breakout to be about 4. A base breakout would be somewhere between 3.5 and 4 on this one. And then that should be good for maybe a move up to 6 or 7 at this point. The volume is starting to come in, but right now this has been very illiquid so far. That's been a terrible trend, but this is the most aggressive entry that I could possibly look at. Okay. All right. I think we have caught up. All right. So Mercia's got a couple of more here, and then this will be it for today. So ACA. Okay, that's a new one on me. ACA is a pretty horrible looking chart. The very first possible base that this could break out from is about 40 cents, but I don't care for this one at all. Does not look all that good. And Glimmer or Glamour, I don't know what this one is. Oh boy, talk about a coin which is like, it is, it's not looking good. So I would let this one continue to drift down until it starts to head higher. I wouldn't even call out a base on this one. Again, if you want to separate the wheat from the chaff here, what you can do is just go to a weekly chart and wait for a hike in Ashies to start really printing a decent trend to the upside. This one's just crawling along in the sewer right now, and it does not look very good. But things can change. But again, my take on things is that I only want to be trading things that are trading higher in price, trending higher in price. So with that, thank you very much. I appreciate all your suggestions. Mav, do you have any questions directed at you that you want to answer, or any final thoughts?
Yeah, let's see. There's some questions kind of about like the recessionary environments, and yeah, questions about the yield curve. Wow. Honestly, without getting into too much detail, because I think we're a little bit over time here. Yeah, we're in a similar period to what's come before, but at the same time, we're kind of in uncharted territory. It's similar but different, I suppose, is the tagline. So I think playing to that, being risk averse while also being forward looking and risk on as things hopefully improve. That's sort of the play right now, at least in my book. But like Doc said earlier, just because the market starts to turn around does not mean it is a true bull market or anything that's going to represent what was between, like 2010 and 2020, like we definitely have some things to iron out, and it's not going to be a cut and dry, very easy recovery ahead of us. It's going to be painful at times, but at the same time, we are with data like today. We're seeing stuff peak out. Inflation is actually on the downturn or the downtrend, which is somewhat promising. It's got to sustain that trend, and we'll see if it does. But regardless, I think right now it's sort of a wait and see approach, and just be very cautious. Only play with the large caps until things get a little bit more. I guess there's more of an appetite for greater degrees of risk. But right now, yeah, I would say try to stay employed if you're not already retired, and try to be as capital preserving as possible while diversifying as best you can, given the absolute crazy nature of the overall markets right now. But that aside, yeah, we'll continue to watch things and see how it develops from here. Already it's looking like the back half of 2022 is going to be a little bit more interesting than the front half, which is I'm excited about. So we'll be here to help you through it. And as always, come check us out at our links down in the bio below. Anything that we covered today sounds interesting, or like our take on things, which is all about not shilling and giving you sort of a no BS take on the state of things and where they're going. Hey, come join our free Discord, join our free communities like ReadySetTrade, or check out on-chain intelligence with ReadySetVision, all to try to make you a more effective, more informed trader and investor in certainly these uncertain times. So that's what we're here to do, and we'll continue to be a resource and a source of nothing else, just sanity in these crazy times. But as always, we appreciate you and this community, and thank you so much for hanging out with us. Doctor, you got anything else?
I'm just going to say that the biggest mistake that people make during times of uncertainty like this is to look for somebody's opinion that they resonate with, and then they get locked in on that opinion. And then if that opinion happens to be wrong, which is usually the case, they get taken down with them. So it's almost like having, concrete overshoes with that. And this is why, I'm seeing the entire Wall Street Bets subreddit just get destroyed right now, just because of all this YOLOing and, chasing after one stock, and, people betting their life savings on one particular play. It's insanity. But through the miracle of social media and everything like that, this is what people feel that they're supposed to be doing. And we've been kind of pounding our shoe on the table for the last 4 years, like, just follow the price. Keep your head out of the news, out of the opinion, because even the news is not necessarily your friend, because the news has an opinion bias behind it, because they're going for your eyeballs, they're going for your clicks, and it's not going to serve you well. So if there's one thing that you can pick up from me, let the price make your decisions for you. And one last answer here for Norm. No, I don't care about the futures expiring. I've been following futures expiring for years. They don't make any difference in the price. So with that, any final words there, Mav?
Hang in there. It's going to be a bumpy ride, but I think we're in this for the long haul and for the right reasons in the right space. So as always, appreciate your time and being part of this community, and we'll see you next week. But until then, take care out there, guys. Cheers.
All right. Take care, everybody. We'll see you around. Bye now.